I would like to pull up the S&P real quick if we can,
Yeah.
maybe take a look at, what we referenced in terms of the pullback and the rally and now the chop, because I know later in the show we're gonna talk about the choppy session, the market not knowing if it's gonna go up or down, and how we can use options and premium selling to take advantage of it. But, when you look at the market where it is now, what are you thinking? What are you seeing?
Well, so there's different ways to analyze, you know, the markets. One of these ways that I like is called technical analysis. That's where you use different sort of indicators that are looking at the data, price data, volume data in the past, and you're looking for repeating patterns. But there's also things like chart patterns and bar patterns that people use. And there's, of course, data about the individual companies, right? That's called fundamentals analysis. And then we had Fausto on the other, a month or so ago. And Fausto does what I call quantitative analysis. He's actually looking at the order flow, the buying and selling, and the number of orders that are queued up to be filled, right? And he makes his trading decisions based on that. And I like to take kind of a holistic view. I like to use all these different methods, and if they correlate with each other, if they agree with each other, you've got to trade. All that to say, there's a common pattern called a key reversal down. This is a bar pattern, right? Bar patterns are like key reversal downs, Lincoln's hats, upside down Lincoln's hats, dojis. If you're into the candles, I mean, there's a whole mess of bar and chart patterns with candlestick analysis. But the key reversal up or down, this is a key reversal down pattern. What it is, SIP, is it's when you have one bar, right? And then the next bar has a higher high, but then a lower close. And what that usually tells you is that, you're perhaps finding a top. We had two of those. So if you look over here, this is Monday right here. Monday was a nice, up bar. But then on Tuesday, we had a higher high, and then we closed lower than we did on Monday. Now, Tuesday was kind of what we call a doji bar, where the opening and closing prices are very close to each other. That means that the bulls and the bears kind of had it out during the day, but when all was said and done, not much happened. Then on Wednesday, we had another up day, but on Thursday, here's another key reversal down bar pattern. And this one was significant because not only was it a key reversal down bar pattern, it was also one of these where you started, opened up high, and then you went low. That's called a Z bar because it kind of looks like the letter Z. These are all like increasing hints that perhaps we're finding a top. Now, I use technical analysis. You guys can go and download my indicator suite for free, and the one that I'm using here in order to uh, decide what the broad market is doing is my confirming indicator MA, which stands for moving average. And if go ahead.
I didn't have anything. I'm listening.
Oh, right on. I thought, something was happening. So on the moving averages, I'm using a 3 and a 5 exponential moving average crossing, and so my arrows pop up here when I get, and this is called a lagging indicator. It's a few days late, but it makes sure that we indeed saw a top or a bottom. And so what I like to do is when I see one of my indicators saying that a top or bottom has been found, I'll look back for those key reversal up. I'll use those bar patterns as a sort of validation that my indicator really did find a top or a bottom. So I wouldn't be surprised if my indicator appears in the next couple of trading days and we look back and we're like, yep, that for sure is a top. We should start thinking about going down.